I'll start with you because you were at this Berkshire meeting over the weekend, too. Some of the comments about Apple or even some of the other tech names like Amazon and Google, what was your take?
Yeah, look, it was my 22nd consecutive annual meeting. I've been a longtime Berkshire and Buffett and Munger fan, and generally I loved what I saw. You know, people ask me, well, what's changed over the years? And in many ways, it's the same people asking the same questions and getting the same answers. But that said, amazingly enough, an 88-year-old guy and a 95-year-old guy are actually getting better with age, and I think Apple and now Amazon is a good example. If you look at Buffett's first foray into tech, it was in IBM, which is a terrible value trap, and he was lucky to escape without losing money, but there was a real opportunity cost of tying up $12 billion in a value trap for 6 years. But then he recognized the mistake, he sold, bought a much better company, Apple, and I was delighted to see them, or at least one of the two managers, buy Amazon last week.
Yeah, Bruce, one of the comments that really got my attention in terms of what Tim Cook said to Becky was that Berkshire's investment in Apple shows that Buffett understands the iPhone maker is really a consumer products company at its core. I feel like every company across many different sectors right now wants to be valued as a tech company. That seemed very contrarian to me. Bruce?
Oh, I'm sorry. Could you repeat, please?
The idea that Buffett's investment in Apple is really can really be seen as a consumer products company. Apple seen as a consumer products company rather than just a tech company. Your thoughts on that?
Well, I think it is that. Everything is about the end user. Everything is about that person that's going to join or stay with Apple. So there's 100% focus. A lot of tech companies are interested in selling their products to managers who are then going to have workers use them. So it's a different approach.
Whitney, Tim Cook, just on the Apple earnings call a week or two ago, said that sentiment in China around trade had turned positive, and that was the cause of their bullish outlook for the current quarter, sent the shares higher. Now, even if we do get a trade deal of some sort, sentiment certainly can't be as clearly positive as it was during the call. What do you think of the impact on Apple and other companies that might have been relying at least on this momentum in the Chinese economy and U.S.-China trade talks to do good things for the market?
Yeah, look, there's a big wild card. You know, Trump is there's a lot of bluster, and he's sort of trying to bully the Chinese into a deal, and it might work, but it might blow up. It's a pretty high stakes game he's playing that has real implications for an awful lot of companies, not just Apple. I tend to think calmer heads will prevail, and there will be some sort of deal here. The Chinese are super rational, and at the end of the day, I think Trump's a deal maker and is going to want to point to a deal. So I think it will end up being something that's not going to disrupt Apple or the market too much is the most likely outcome anyway.
Yeah, Bruce, in terms of the services story at Apple, obviously iPhones are still a big part, still a majority part of the revenue here. But as the company does shift into more subscription models, I guess, do you think that the stock is trading where it should be based on those future lines of revenue?
Well, Apple has an upward trend, and it will continue to have an upward trend. And this expansion sideways is certainly going to aid that. The other part of the subscription model that's unrecognized right now is the subscription to the phone itself. They have a program where you get a new phone each and every year. And as more and more people drop into that particular subscription, that's also going to overcome this reticence people have to buy a new phone. For example, when I upgraded from the X to the XS, I didn't expect much, but the fact is that the XS is a much finer phone. The interface that the X could just barely handle with all its improvements just glides smoothly with the XS. So people, because the phones no longer look so differently externally, are hanging around waiting, not realizing that the technology has improved. And by getting people into subscribing to the phone, as well as this growing body of services which hold you in the walled garden. You know, okay, I'm going to switch to a Samsung phone. So not among the other things I'm going to lose, all of a sudden I lose my Apple Music. I lose this wonderful new magazine and newspaper service that gives me access to a couple hundred publications for very little money compared to subscribing individually to these things, a tiny fraction. And I lose the ability to slide photographs to all my friends who have iPhones and iPads and Macs and so forth. So that walled garden, it's got this huge wall around the outside, true, but boy, inside it's just completely flat and open and inviting. And people don't want to leave that. So it just makes this whole thing stickier and stickier.
Whitney, you've been invested in Amazon in the past. The fact that Berkshire, and I realize it's not Buffett specifically, the fact that Berkshire is now buying shares of this company, were you surprised?
You know, honestly, if you'd asked me to bet, I would have bet the next tech stock, which I've been begging them to buy for a couple of years now, would be Alphabet or Google, rather than Amazon. I was delighted to see Amazon. Keep in mind, you could see from the cash flow statement in the first quarter, it was less than $2 billion. So this is still a very small starter position. I expect them to add to it, and I hope they add Alphabet to it over time as well.